Tax the rich. A simple phrase, a seemingly noble one that means people like Mark Zuckerberg opening their mailboxes and finding out they have to give a million of their crusty shekels to the government. One that millions of Americans have heard over the last couple of years, and one that Washington State recently said, "Hold my smoked salmon" on and implemented last month. And no time has that phrase become more prevalent, and for good freaking reason. In January, the Fed reported that the richest 0.1% of the country owns 14.5% of the national wealth, the highest percentage it's gone to in at least 3 decades. Now, if you don't know what a wealth tax is or what taxing the rich means, wealth taxes aim to make those who earn a certain threshold, like X million dollars a year, pay an extra tax so that their money can go to the government for them to spend on gold-plated needs for the general public. Because that's what governments are supposed to do, right? Most people watching this will probably think, okay, that sounds good, I like it, or okay, that sounds bad, I hate it, and then go to another video. But wait, not as simple as you might think. Let me show you the real interesting stuff about wealth taxes. To start off, I want to clarify that wealth taxes don't tax what rich people earn every year, but instead their net worth, aka their real estate, stocks, businesses, and whatever else they have that has potential value. This is different from an income tax, which is based on what people earn yearly, and we do have those in the United States. Wealth taxes are basically the government saying, "You see all those body pillows over there? They have value, son. Give us X% of their value so that we can give people, places to live." That X, of course, depends on the proposal and the brightness of the hair of whoever's proposing it, but it's usually a small percentage, from around 1% to 10%. This whole shebang isn't just being dreamed up by disgruntled Americans. This has been done before in other countries, particularly in Europe. Dang, I can really use that sentence for a lot of things now that I think about it. In 1990, 12 OECD countries had them in some form or another. However, today only 5 of those countries have retained those taxes. I'll get into why later. Wealth taxes are particularly popular among the left wing, as you might know. Zohran Mamdani, AOC, Bernie Sanders, etc. have all shown their support. Proponents of wealth taxes state that they will relieve wealth inequality and provide an additional wealth stream for the government, which is of course good because our government always makes the best financial decisions. Ignore that we're like $1 trillion in debt right now. TaxPolicyCenter.org reported last year that a 1% tax on people with a net worth of $50 million for married people and $25 million for unmarried people would raise nearly $2 trillion. 99.9% of which today would go to the military, but that is, of course, absolutely necessary. It's not just based on economic strategy, though, but also 2020's level social justice. Like I said briefly in my last video, there's a lot of debate if the US is in an oligarchy disguised as a republic. To many people, billionaires run not just the country, but the world, and wealth taxes are being seen as a way to get at least some governmental leverage. So, taxing the rich doesn't just seem economically right to proponents, they're also seen as ethically right. Walking over to the other side of the aisle, a lot of other people look at these proposals with skepticism at least, and hatred at most. Part of this is concern on the logistics of imposing a tax. Look up the net worth of Elon Musk and you'll get responses from $809 billion to $636 billion. Unless the man is selling and buying houses every day like candy bars, which now that I think about it, he probably is, you'll see that for the rich, who unsurprisingly own a lot of assets, net worth is hard to calculate. Add to that the fact that net worth doesn't equal cash in a bank account, and some people might not be able to sufficiently pay the tax. Opponents have also claimed that the ultra wealthy will en masse try to artificially lower their net worth to make themselves exempt from the tax by sending their assets somewhere else. Or, as I've heard millions of times from living in New York, just move away from the area. A point of reference for opposing views is the aforementioned fact that multiple non-default countries repealed their wealth taxes due to a variety of reasons, including their incredible complexity and overall small revenue raised in those scenarios. The wealth gap is increasing at an unprecedented rate, and wealth taxes are being simultaneously hailed as a solution for the future and villainized as an idea that sounds novel but will, in practice, be a disaster. While it is impossible to know exactly what wealth taxes will look like in the 2020s US until we see the results of them after they're enacted, we can use the lessons of the past and the estimations of the present to figure out whether we should enact them and or how we should enact them. Do you believe that wealth taxes should be implemented in the US? And if yes, how do you think they should be? Leave your thoughts in the comments for me not to read. And on that note, I'll see you around. And remember that before you buy 10,000 anime body pillows, make sure your net worth is below $1 million.